Hello, fellow traders everywhere. Adam Hewison here, just back from our recent Market Club Summit in Salt Lake City. Had a great time there. But let's get started with your midday market update for Monday, the 2nd of April. So here we are. We're in April now, the first quarter, one of the best quarters since 1998, is under our belt. We had a great quarter. What is Q2 going to do for us? So let's take a look at the markets. We're going to be looking at our charts. And we're going to go straight to our portfolio manager. We've got a number of markets to go through. We'll be looking at crude oil as it's reversed from a very important Fibonacci target zone. We'll also be looking at why Coty wants to buy AVON and looking at both those stocks. And also we'll be looking at 3 different stocks that are on the move today. So let's get started. Obviously, with today's action, we are plus 100, very strong trend. We've really never changed our mind on this market at all. You can see we're going to be closing a new high ground, another leg up in this bull market. And if we put our trade triangles in, you can see we've been long the trade triangles just right from back these levels here, which is quite something. So let's see how that plays out. But the trend is clearly on the upside. You can just have to look at this trend, very strong. This level right here, this is the 1391 level. That's going to be a key level right here. That must hold if the market's going to continue to go higher. But like the action today, new high close over the previous high close here. So this is definitely a bullish scenario as we see it. So let's clear the screen. Let's go to our next market. And we're going to pretty much the same scenario for the Dow as well as the NASDAQ. The NASDAQ is not quite as strong, but you may remember that was the big winner last week. This is I'm going to scope this out. This is a bullish engulfing line that we're seeing right now in this market, and that normally indicates you've put a bottom in. So I think the low that we saw last week on Thursday is probably going to be the low that's going to hold, and it looks like this market wants to go and challenge these recent highs, so right here. So let's see how that plays out. So let's clear the screen again, and let's go to our next market. And the next market we're going to be looking at is going to be silver spot. Actually, a pretty good day today in silver. So this is what we're looking at in silver. We still have our long-term monthly trade triangles in a positive mode. I'll put that right down here for now. And it looks as though you're trying to build a case of a bullish scenario. Here's the potential trade, but this level right here, right along these tops here, that's definitely going to be a major challenge. That is the resistance level. If we get the market over that level, I'll give you that level in just a second, then I think we've got a good chance of moving up and testing some higher levels. But for the moment, you are still in a pretty much an emerging trend to the upside. Let me just clear the screen off for a second, and we'll take a look at that levels we're looking at. So we're looking at potentially the 33.18 level and 33, let me just get that right, 33.22. So I would say if you really want to be safe to look at if there's such a thing as safety in trading, you want to be looking at the level above here, which is the 33.50 area. If we close, and I like to see a close over that area, then I think it's going to look very good. Just to touch it, you see we've had these little touchy points here that sort of reverse back down. Let's see how that works out. But generally speaking, that will probably be a positive sign all around. So let's see. We've got our monthly still positives, never changed. Daily now positive. All we're waiting for now is this weekly to kick in. So let's clear the screen, go to our next market. And the next market we're going to be looking at, of course, is gold. We look at this market every week, or every day, I should say, because it's an important market to a lot of our people who watch these videos. And let's go there right now. So gold has got the clear level there, and that's the 1700 level, which we are going to just sketch in for you. That's definitely the big sticking point right here in gold is right here. That's 1700. If we close over $1,700 an ounce, then I think there's a good chance we'll see this market move up and even test the 1800 level. So lots going on. We were looking for a market to make its low towards the end of March. It may have come in a little bit early here. We're looking for the 1620. I think we got the 1625. Very close to our Fibonacci retracement level. Again, another pullback. So these levels here are very, very important now if gold is going to continue on its upward way. So plus 55, minus 55 is a trading range. So we are still in a trading range in gold right now, and it hasn't been defined out of this range. So let's see how that plays out. But generally speaking, the monthly and the weekly are still negative, which is not particularly a good sign for gold. So let's clear the screen and go to our next market. It's good to be back in corporate headquarters, and we're doing our show this week on Wednesday. Be sure to tune in for that. It'll be a lot of fun. So let's go to our next market, and that's going to be the copper market, which is actually, again, this market has been in a very, very long, protracted trading range. We have a plus 75, which is right here, means it's an emerging trend to the upside. We clearly have our monthly trade triangles in a positive mode. All we need now is the weekly to kick in, but you can see this trading range. Just draw the line here. It's around 375 on the downside. That's support. And you've got resistance coming in right around these levels, about the 395. So you're sort of in this wide range, just really going nowhere. We're up towards the higher end of that range now, but we need to see this market really break over this level and close over this level, and then we'll have another upward move. We felt this is a very large energy field, which is capable of supporting this market to go much higher. So that would be inflationary and not a good thing for things longer term. So let's clear the screen off and go to our next market. The next market we're going to be looking at is the crude oil market. Now, we were up in, as I say, we're in Salt Lake City this past week with our summit, but a couple of things I want to just bring to your attention. One is the Fibonacci levels we were coming from. We felt this was a cyclic low period, and you can see we got very, very close. So this is the Fibonacci level, 101.53. I think we traded it down today right around the, let me just get this, move this over here. But it traded down today around the 102.06 level, and that was a big move. So reversal from that point. We do have, as I say, the Fibonacci levels in there. It is a cyclic low period. We are starting to move out. The longer term is still positive from 99.36. So I think we can see this market improve from current levels, because there is a, you can view this as we are viewing it right now, as the longer term trend is still positive right here on the monthly. And on a short-term basis, it looks potentially like you've got support coming in at the 102 level, which is very close to the 61.8% Fibonacci retracement area. So what we may see this week, it'll be interesting, if we just sort of bat around here and start moving up, then I think we're going to see another big swing up. But we have obviously some very important levels to go over, one of which is the 109 level here. We need to get over that level, and of course before that we need to get over this level right here, which is around the 107 level. So I think you've got some near-term resistance on the upside, but I think the potential is this market for the most part has stopped going down, and I think we'll see it improve from current levels. So let's clear the screen and go to our next market. In the next market we're going to be looking at, hold just one second, the next market we'll be looking at is going to be the USO, pretty much the same pattern there. A bullish engulfing line, which indicates if we close up here today, then we have put in a low on this market, and I think we'll see this market improve. Now tomorrow, if we close higher again tomorrow, which I potentially think we will do, then this confirms the bullish engulfing line and indicates that a bottom is in place and that we can see this market move higher. So let's see how that works out tomorrow. On the euro dollar, basically you see all these little tight levels here. This is not necessarily a good sign. It looks to me as though we're starting to roll over, and if we put our Fibonacci levels in, we can see that we've exceeded the Fibonacci just by a little bit, but nonetheless it's still having problems right around this level. So I think for the most part the longer term monthly trade triangle is negative, so we may see this market roll back down, and that's pretty much the same thing that's going to happen to the dollar index, except it's going to roll up. So let's see how that plays out. Next market we're looking at is the CRB Reuters Jeffries Index. Obviously a very big positive day today because of oil and a couple of other things. But generally speaking, we are still bullish on this index longer term again. But near term, it's obviously put a low in around the 306 area. But we have resistance starting at 316 and going all the way to 320 and all the way up to 325. So these are the levels, the three levels I'd be looking at in this market. Certainly right here, and that's the 325 level. Right here, that's the 320 level. and right here, that's about the 316 level. We need to move over these levels. It's not going to happen in one day. It's going to take a while. But I think once we start moving over these levels and breaking to the upside, I think it'd be a clear sign that inflation's on its way. And it may take another month or so, but we'll see what happens there. Right now, we're at a minus 60, which is in a trading range. You've got a mixed long-term bullish, short-term negative. So let's see how that plays out for the rest of the week. But generally speaking, it looks like we've got a support and a low put in place at the moment around the 306 area. So let's go to the next market. The next market we're going to be looking at is a stock, and this is, of course, AVON. It's under a lot of activity today because of a potential takeover. As you can see, our monthly trade triangles kicked in at 19. The market's at 22.52, so we've caught the move up here, even the surprise move to the upside with the unintended potential takeover bid from Coty. So looks like we've caught that, and this is what happens with the trade triangles. They catch the moves. It's pretty simple. And if we scope this out even further, let's just take this out and we'll just see how this has performed over, let's say, a couple of years. You can see that we got in the move on the downside. It looks like it's a pretty nice move right around the 320, the 28 level, and coming back at 19. So we saved all this potential pain and aggravation, and that's one of the things you have to do when you're trading. So let's see how this market goes, and we'll watch it very closely the next few days. Next market we're looking at is the ABERCROMBIE and FITCH. Is a big mover today, and again, that market's up. Let me get this. Actually, let me get closer in so you see the move. So there's the move. It's up today, almost 4.5%. You can see our monthly trade triangles are along from 50, and we're currently trading 51.81. So again, here's the monthly trade triangles kicking in right here, and it just looks like it's a nice steady trend to the upside. So let's go to our last market, and the last market is on the NASDAQ is ESRX in Express Scripts. And again, that's moved up in a very positive fashion. You can see our monthly trade triangle kicked in all the way back here at 48.39, and we're currently trading at 56.19. So again, with the monthly trade triangles, you are not going to miss moves, period. It's impossible for these markets to move and for you to miss them. So that's, you can see quite clearly, here's a negative, it's 6.52, and you come back in at 48. So you avoid almost 10% of this drop here. It's very, very important to be able to be fluid and exercise these markets. So let's see how things work out. But you can, for a limited time only, if you haven't tried MarketClub, you can try MarketClub for just $8.95 for a full month. It's a great package. I think you'll really enjoy using the tools, seeing the MarketClub triangles, how they work. But just go to our marketclub.com and click on Start Trial, and we'll get you set up and started right away. Just for doing that today, we have some very special bonuses that I think you'll enjoy. So Adam Hewison for MarketClub. I will see you tomorrow, same time, same place. But you take care, and we'll go from there. Have a great day.